Hello friends, this is your commerce friend CA Yogesh Panchakshari. We are talking about the conceptual and theoretical part of the subject accounts of CA Foundation. As we know, we score really very good when it comes to practical part, but when the short notes are asked, when the multiple choice questions are asked to some extent now in new format, we struggle over there. So today we are going to deal with the conceptual part of accounts. Consignment account is a topic. Favorite topic, I know. In case of practical, there are so many adjustments which are asked and then we struggle with that. But the conceptual part is very interesting. Rather, when you will go through the conceptual part, it will support your practical solutions also. So let's start with the consignment account. Let's see what is given. To consign means to send the goods. What exactly the meaning of consignment? To consign means send the goods. So it's an agreement between two parties. One person is the owner of goods and second is his agent. The owner sends the goods to the agent and agent is supposed to sell these goods to the third person for some commission. It means, let's say A is the owner of goods. He sends the goods to his agent B. So A is called as consigner, B is called as consignee. And consigner is will always be the owner of goods till that point it is sold actually to the third person. Consignee will just be a custodian of goods and he will get the commission on it. Okay, so profit will go to consigner or loss, if any, will be suffered by consigner, while consignee will get the commission for his services given. So owner is called as consigner, agent is called as consignee. The document attached by the consigner while sending the goods to the consignee, when the goods are sent, for example, from Mumbai to Chennai, when the goods are sent, then from Mumbai, Mr. A will attach one document or he will send it by mail to the consignee, and that is called as pro forma invoice, the document giving all the details of goods sent. While when the consignee sends all the details of sale, let's say after every 3 months, that is at the end of every quarter, every month, or maybe directly at the end of year, when consignee sends the document to the consigner, giving all the details of goods sold, his expenses on behalf of consigner, his commission and final payment amount, that is called as account sales. So document sent by consigner to consignee is called as pro forma invoice. And document sent by consignee to consigner is called as account sales. Now, sometimes the goods are sent by the consignor to consignee by adding some internal profit. Let's say if I manufactured or purchased this mobile for rupees 10,000, or of course not 10,000 for Apple, let's call it, let's say 50,000, which is also very less. And but while sending the goods, I told that consignee that these goods are worth 60,000. So here 50,000 is the original cost of goods. 10,000 internal profit added is called as loading, and 60,000 rupees, that is the price which is told to the consignee, is called as invoice price. So the higher price is called as invoice price. Now, let's assume I sent 10 units to him at 60,000. So 6 lakh rupees was the total invoice price, while 5 lakh rupees was the cost. 1 lakh was loading, that is internal profit added. Till the end of the year, he sold 8 units and still 2 units are with him. That means 2 units multiplied by 10,000. So internal profit 20,000 is total internal profit, which is added in closing stock. I repeat, when I send the goods to him, 1 unit was of 50,000. I told him that it is of 60,000. Out of 10, he sold 8. So 2 units recorded by him at 60,000, but its actual cost is 2 into 50,000, 1 lakh only. So this 20,000 internal profit is called as stock reserve. It is to be cancelled from the consignment stock, that is consignment account debit side, as well as in the asset side, it is reduced from the consignment stock, called as unrealized profit or stock reserve. Now let's talk about different types of commissions which are offered by the consignor to the consignee. One is normal commission, let's say 10% of total sales. Sometimes we need to give some motivation to him. So what we offer is, if you sell the goods till rupees 50 per unit, you will get 10%, but above that you will get 5% extra commission, and that extra commission above certain level is called as overriding commission. I repeat, normal commission, extra commission paid to motivate him is overriding commission. Now third type of commission is also there. Sometimes we fear about credit sale. If my agent, my consignee sold the goods on credit, who will recover the amount? So I pay extra 4%, 5%, 8% to him, but with the commitment that he will collect the amount from debtor. So bad debt will be the responsibility of consignee. If that commission is given, it is called as del creditor commission. I repeat, any commission paid by the consignor to consignee for recovery of bad debt is del creditor commission. Now, let's analyze the situation. If the consignor is paying the del creditor commission, if the del creditor commission is paid, and if there is any bad debt, then consignor will totally ignore the bad debts, while consignee will suffer this bad debt and he will reduce it from his commission income. Commission income is credit, so he will debit it to commission income. I repeat, if the del creditor commission is given, then consignor will totally ignore the bad debts, while consignee will adjust it from his commission income. Now, if the del creditor commission is not paid, if it is not paid by the consignor, then bad debt will be the responsibility of consignor. He will debit it to consignment account, or he can reduce it from sales consignment credit, and consignee will now ignore because he has not received any commission. That is why this is called as del creditor commission, additional commission for collection of the amount from debtor. Now, coming to the next concept, normal loss versus abnormal loss in consignment. Consignor knows that some percentage of goods are lost in transit, may be destroyed in go down. It's a normal expected thing. So it is called as normal loss. So if it is expected loss, for example, if A sent 50,000 units and B received only 49,000 units, and A said 200 units were expected to be gone. So that is why it is called as normal loss. It is never recorded in the books and it is absorbed by good units. I repeat, normal loss is never recorded in the books. While abnormal loss, unexpected loss, 800 units lost, which was not expected, is called as abnormal loss. It is valued as per the stock valuation and it is transferred to costing P&L debit side after reducing the insurance claim. So normal loss not recorded in the books, absorbed by good units. Abnormal loss recorded in the books and after reducing insurance claim transferred to P&L account. Now, there are two types of expenses of consignee. One is called as recurring expense and second is called as non-recurring expenses. What is that? Recurring expense means an expense which is to be paid even if you receive these goods or not. Even if you get the consignment or not, you'll have to pay these expenses called as recurring expense, like go down rent. Even if you receive particular consignment or not, doesn't make any difference. You'll have to pay the amount to the go down owner. So that is recurring expense, and non-recurring expense means exclusively paid to get the consignment goods. That is, we can generally or we can remember it as a particularly traveling and transportation costs like octroi, freight, carriage inward. These are all expenses which are treated as the non-recurring expense. But why this bifurcation? Recurring expenses are never considered in valuation of stock, which we have seen in practical part also. But all the non-recurring expenses are covered in the or considered in the valuation of consignment stock as well as abnormal loss, because you have to recover this cost from the sale of the closing stock next year as well as from insurance company. So I repeat, recurring expense ignored in case of valuation, but non-recurring expenses are considered. Now, trading account records all these goods. So trading account always records the goods sent at cost, not at invoice price. That's a very small thing we have to remember. And finally, whatever profit comes or loss is suffered goes to consignor, and consignee gets the commission for the activities done by him. So this was all about the theoretical conceptual part of consignment. And consignment, even though it's a practical topic, I know many of the questions are asked on practical basis, but still theoretical part is extremely important. I repeat, not only from getting the marks in conceptual part, but also to understand the topic properly. So revise the short notes again and again and get full marks in this also. I wish you will not lose a single mark in this topic, because many times theoretical and conceptual part comes with a very good gift for you in the examination. So go through the video again, pause it wherever you want, understand it properly. If you have any doubts, just drop it in the comment box. If you like it, drop it in that also in the comment box, and don't forget to push the like button. Thank you.